I think people shouldn't be afraid to invest because we're near all-time highs.
It doesn't feel like we're in a bubble to me.
86% of respondents to CNBC's Delivering Alpha survey forecast more gains ahead for big cap stocks in the new year.
People are good at justifying these things. If they couldn't justify it, we wouldn't have bubbles. Bubble is about elevated prices, elevated PE ratios. We have those things today. People should be afraid of losing money.
Now, personally, my views are in line with Howard Marks in the great bubble debate. I think everyone knows it's a bubble and they're piling in anyway. In this video, we'll look at some historical data that might cause you to rethink the hype. Hey guys, I'm Brian Whitmer. I've got a little experience with these hype cycles. It's coming up on 2 decades. I've been navigating markets at Elliott Wave International. I want to begin with a truly revealing Bank of America survey. It just dropped. 89% of fund managers say that stocks are overvalued. That's a 24-year high. Same survey, over a third still think equities are the best bet for 2025. So yeah, it's a bubble, but it's going to keep inflating. This sentiment is echoed up and down, both Wall Street and Main Street. Market Watch, I think, really nailed it here. Young traders don't care if stocks are in a bubble, right? Now that actually makes some sense because anyone under, say, 35, 40 years old really has no firsthand investing experience with what comes after a bubble. What's more alarming is that the professionals appear to be just as reckless. Pension fund cash levels, 2.1%, mutual fund cash, 1.6%. Both are at record lows. This is the flip side of sentiment in the 70s and early 80s. Back then, the pros were raising cash levels, right? They were fearful that the bear market would never end. It did end. 74 was a low, 82 was a major low. That's when funds should have been fully invested in the market, and they weren't. Their cash was historically high, and it's been declining ever since. I just find this ebb and flow of sentiment endlessly fascinating. One more quick angle here. I want to talk about leverage. We've said it before. The long side of the market, it's not just crowded. It's crowded and highly leveraged. Margin debt at the New York Stock Exchange, nearly $1 trillion now. New record, triple the level from 2000. Investors aren't just chasing the rally. They're chasing it with borrowed money. That's important because when things flip, those margin calls hit like a freight train. Now, there's not much more to say, honestly. Everyone's giddy. Cash is gone. Leverage is maxed out. Everyone seems to know it's a bubble intuitively, yet no one can extract themselves emotionally. We've been here before. These are precisely the times when wave analysis shines. Our services really strip out the raw emotion and push you to look at market patterns. All the charts and the analysis in this video come from the latest issue of Global Market Perspective. I'll put subscription links in the description. Thanks for watching, and I'll see you in the next video.